What's up, y'all? I hope you're doing well. Today is Thursday, and first off, I apologize for not being active. I haven't posted in like 6 days, and I haven't really been paying much attention to the charts. Well, I have, but I've kind of only been paying half attention to them, and truthfully, that has been a major mistake on my part. I've been taking a lot of trades, but without really putting the time and the effort into my trade setups. And whether that was because I've been busy the past week or so, which I have been, that could be one reason. But also, I think it has to do with me just being impatient and not wanting to put in the work for these trade setups over the past week. I guess the best way to explain it is I've been half-assing my trades. I haven't been putting in the full effort to try and find the best trade setups possible. I've been forcing a lot of trades. I've been even at points being a little irresponsible with my risking more on lower confidence trades than I should. I've not been taking profits when I should and de-risking my trades. And essentially those mistakes had a snowball effect to where those mistakes amplified each other, which ultimately led to me losing about 5 to 6% of my trading account over the past week. And I'm not going to spend this whole video talking about the mistakes that I've made, but I do think it is important to talk about my mistakes because I think every trader makes mistakes. I think a lot of traders don't talk about their mistakes. And I see why it's not, the best content to talk about why you lost a couple trades, right? Usually the better content is talking about why you won some trades, but the truth is every trader makes mistakes. Every trader can fall into these cycles of poor decisions. And I think the best thing to do now is try and reflect on why I made those poor decisions and attempt to correct my mistakes. And really, it just comes down to me being irresponsible and not following my rules as strictly as I should. Rules that I have to get me into high probability trades, to find the best possible trade setups, and then the rules I have to mitigate my risk when I'm trading and also to, realize profit when I have them. Those are all things that I have been lacking on recently. And whether it's because I've been busy and I haven't been able to spend that much time at the charts, or whether it's because I'm just not super motivated to trade, given the fact that I'm trading with a smaller account than I'm used to, even though I don't want to make that excuse. I think, regardless of your trading account size, you should be, just as motivated to trade, just as motivated to make the right decisions because, ultimately that is what's going to make you a better trader. And I did essentially make a promise that I would, put my best effort forward to try and grow this account to, make the best trade decisions possible, to show that planning for good trade setups, being disciplined in the decisions that you make when trading, and essentially just being consistent over a period of time can produce the results I want, which is, exponentially growing an account essentially. Growing an account as the account grows, growing your risk, but maintaining the same trade strategies, the same rule set. That was my goal with this challenge. But, truthfully, so far I have not been living up to my own expectations. So with that being said, I have, some work to do. I have dug myself in a little bit of a hole here, and I have also wasted some time when it comes to this challenge. But I also think that time is not wasted if a lesson is learned from it. So going forward, I'm going to remember these mistakes that I made, remember the outcome from the mistakes, and attempt not to repeat them. So that's it for the excuses. Let's get into the charts. And, there are a few trade setups I'm looking at right now. Right now I am only in one trade. I'm in this Bitcoin long, and this was just off of a little scalp that I took. I did follow my rules with this one. I took a 0.5% risk with this, meaning I risked less than 50 cents. And, so far it has been a decent winner. I'm up, about 1.5% in realized and like another 1% unrealized. Essentially, this trade idea Originally, I was looking at a short from this level actually. So what had happened here was we came up to take out the high of this local range that we formed after getting this massive dump. Usually we form a range after an aggressive move like this, so we were trading in a range. We came up to SFP, the high of the range, and from there I was watching structure to see if we'd get a bearish break following it. So we had a bit of structure here on the 3-minute. As we came down to test that 3-minute high or low, we did not see a break. We only saw wicks below that low, so it was an SFP. And this wasn't the highest confidence trade, but I'd say I was responsible with this trade in the sense that I did everything I was supposed to. I took a 0.5% risk, which is what I agreed on for scalp trades. I, de-risked this trade and TP'd at the first reasonable point, which was right around this local high. I was watching price action carefully to see if potentially we don't even reach this high, right? Maybe this ends up being a Wyckoff Model 2, and maybe we only get a wick up into this little order block here. So I was watching that, and yeah, essentially I treated this trade with respect, and it ended up playing out. Even if it didn't, if it didn't play out this nicely, if we just came up, maybe put in a lower wick, I probably would have closed the trade. So even though this wasn't the most well thought out trade, this was definitely a scalp trade by my definition of it. There wasn't too much going for this trade, other than the fact that I thought there was a reason that we could come higher, given the inefficiency that we had above us. This was a very quick move to the downside, meaning I wouldn't be surprised if we saw a quick move to the upside. And, things on Market Cypher were looking pretty decent. I mean, we were getting a trigger wave on the 3-minute, money flow increasing. So there were a few things going for my trade setup. Those were all things I considered. And I, de-risked this trade quickly, like I do with scalps. I took profits here, put my stop loss to entry. And from there, I continued taking profits as we continued moving higher. Ooh, look at that. Price just got a wick into that significant area. So that's something to pay attention to. But from there I took profits as we continued getting a move up. I didn't take profits on this pump. Man, my computer's being very slow. That's annoying. I missed the TP here, but I TP'd right here as we got that next move to the upside. Once I saw that wick coming back down, I was like, all right, that's close enough to the high to where I'll take profits there. I closed out a pretty significant portion of the trade right here, and that was the last take profit I hit. So I only had 2 TPs so far, here and here. And I'll quickly run over this idea. So essentially, we know that we're in an internal range right now. There is no primary structure going on in this area right now. This is all internal. And, recently we came up to take out this 2-hour internal lower high. Now this is an internal point in an internal range. And, the reason I say that is because if you take structure from the low, that is not a market structure point. Market structure from the low looks like this: higher high, higher low, and then higher high. This was not a higher low because on the 4-hour, the low was put in one candle after the high. It was too quick of a move down. I don't like to consider that structure. If you look at the 4-hour, it was literally only, 2 candles apart, the high and the low. So that isn't good structure on the 4-hour, and some traders who are much better than me, much more experienced than me, agreed on that. So yeah, I went with it, and the 4-hour higher low was, in my opinion, right here. So what had happened since we put in this high, we came down to break 4-hour structure. So taking structure from the low, right now we just broke bearish, and we're trading in between these 2 market structure points. We have not touched the low again yet, meaning there has not been a continuation of market structure, and meaning we can technically retrace all the way back up into this area wherever we want to put in a lower high for another lower low. But taking the structure from the high, it is a little bit different. We have a downtrend here, and you could just say we have one move down and then one move up for this lower high. So this is a market structure point from the high down, and we just came up to take it out. Now, did we close above it? Well, we technically did, but I would not call that a strong break by any means. In fact, that is much closer to an SFP than it is to a break. If you just look at the price action above the break and structure line, like if I just circle this area here, it is 90% wick and 10% candle body. That is not a strong break, and that makes me consider this more of an SFP than an actual break. And the fact that we got such aggressive follow through to the downside after wicking that high also makes me think that this is more of an SFP than an actual break in structure. Potentially, this high right here may just end up being the 4-hour higher low. Maybe we came down to here, came up to wick this internal market structure point, and did all that just to put in the 4-hour lower high. I think I said higher low, but I meant lower high. So that is where we're at on the higher time frames, and we just got a wick into this significant supply. I'd say the most significant supply that we have on this move to the downside. It is the only retracement that we had on the 15-minute. There were lower time frame supply zones here, but on the 15, we had this one retrace, and then it was basically a straight shot down. So I think that that zone right here is significant supply, and potentially, if this is going to be the 4-hour higher low, then this might be the best entry for a short before getting a continued move to the downside. So all of this is irrelevant. We can go ahead and delete that. And essentially what I'd be looking for here is a market structure shift. So pretty clearly the higher low is right here. And if we break that, then I think there would be reason to look for shorts. So potentially, if we break it and then get a retest, that's something I could look for. Maybe I'll enter some on the break, and then if we get a retest, I'll add some in, try and get like an average entry right there. But that is essentially my next trade idea. So it's about an hour later, and I think it's safe to say that that trade idea is no longer valid because we've come up to take out the high again. So, no longer looking for a rejection from supply because supply did not hold. And the next thing I'd be looking for now that we took out the high, potentially a close above the high, producing a much better break instruction than this, and hey, maybe then we can actually see some bullishness here. Considering the fact that, I probably would call this 2-hour structure, even though it's, still not great. I mean, there were at least 1-2 candles in between the high and the low, so I guess I would call that 2-hour structure, meaning like, this is still internal structure, but it's not as insignificant as, you may think. Because I think breaking this lower high could actually mean that we, eventually come up to this guy. Even though technically, on the 4-hour, we are still in a downtrend potentially, and we can retrace anywhere up until this high and still potentially put in a lower high. I do think that breaking this structure significantly would, be relatively bullish in the sense that maybe I wouldn't be, 100% looking for a 4-hour lower high anymore. Maybe we do come up to take out this high. And so with that being said, we have 4 minutes until the 4-hour candle closes. So let's see what happens here. I think if it closes right now where it's at, that is certainly a significant break. You can see a large difference between what price looks like right now and what we saw at this high. Unless we get a very significant dump in the next few minutes, this circle is 90% candle body, maybe even 95%, and the wick is very insignificant, whereas in this circle, the wick makes up most of the price action here. So, we'll see where this closes, but right now it is looking pretty decent, and, I'd be pretty surprised, honestly, if we just wick down, take out this high that significantly. I think that if we took out this high, it would just be like a little SFP, quickly fall back under, and then, immediately dump from there. But we'll see. Maybe we end up getting some crazy wick on the 4-hour and just dumping again. But I just don't see that as the most probable outcome. I think, we probably will see some sort of continued move to the upside from this, at least until we flip this structure back to bearish. So, maybe we end up doing this and flipping it back to bearish before we get to the high. That's possible. But, this kind of gives me more of a bullish bias. And I am in a long trade still, which is now up, a good bit more than it was at the beginning of this video. So, I'm going to, continue managing this as best as I can. I don't think I'm going to take profits right now, though, especially if we close with this much of a bullish break. Let's check the other hourly time frames. So the 3 hour actually did get a wick that closed below, so that is something to keep in mind. I'd like to see the 3 hour close above that wick now, but yeah, we're not going to get that for another 2 hours. But 2 hour candle still isn't closed, and the 1 hour got a wick as well, but this closes in 2 minutes. So this looks very similar to the 3 hour. And so I really would like to see this close in the next 2 minutes above this wick here as well, along with the break on the 4 hour. I think that'd give more confluence to the idea. And honestly, if we wick this on the 1 hour, but it's still a close on the 4 hour, like let's say we close right here, and if we go to the 4 hour, yeah, that would still be a pretty insignificant break. The wick would be larger than the candle body in that case, so yeah, I would like to see us close above that 1 hour wick as well. And if we don't, I'll probably TP on my long. If we do, well, I think I have reason to keep my long open if possible. And, the way I would get out of this long would be following probably 15-minute structure now. We have some pretty clear 15-minute structure on this uptrend. So, yeah, going from the low down, we have this structure that if we see that break, then I'd probably get out of my long. So new invalidation for my trade is probably going to be down here below this low, along this low, just giving myself a little bit of room. And if we, start producing some structure up here, but then break that 15-minute structure bearish, yeah, we could still be bullish on the higher time frames, but that means we could retrace a lot before putting in the higher low. So at that point, I'd probably want to get out of my long as well. And we are now getting an aggressive pump to the upside, less than 30 seconds away from closing this 4 hour candle. We just got the close above the break of structure point. So, yeah, I'd say things are looking a bit more bullish right now. And I think I should have a TP set up around these wicks somewhere up around these highs, because since we're getting such an aggressive move to the upside right now, if we keep pumping, it's probably just going to be to grab some liquidity. Maybe that's when we get the retrace. And maybe we can continue our way up later. I highly doubt we're just going to see a pump straight up through this high. And if we do, we're probably going to wick it. So I think it is probably a smart idea to have a limit order set somewhere up in this area. So I think I'll go with that first high, and we'll front run it slightly. And that's going to be a 25% TP, I think. So I'll copy those coordinates, put that in there. And 25%. So yeah, that's going to lock in 88 cents. That's a little under 1%. I think that is fair for my next TP for sure. So we came up to my first TP, or where it originally was, and we actually wicked that high perfectly. If I can get this to line up on the high, we wicked it near perfectly. So that was good TP placement, I have to say. However, I did not hit a TP here. I hit a TP here and over here. So I closed out half of the remaining position from the last update. I had $2 margin, now I have $1 margin. And the first TP I took right here as we started wicking away from this high. Figured that was close enough to my TP. I was front running that high a little bit, so my limit order was like right here. We just barely front ran it. So I took the 25% early, and I closed another 25% of what I had left in the trade before my TPs. So I took another TP right here as we started dumping down away, because it looked like we might have been forming a 1 to 3 minute distribution here. 1 tap, 2 tap, potentially 3rd tap right here. And this is something I'd seen before. I'd seen a 1 minute distribution actually be the top of a aggressive move like this, and then we just dump away from there. So considering everything, the fact that I need to lock in profits in order to regain some of my losses, the fact that this was a scalp entry to begin with, and the fact that we are around what I would call the ultimate targets of any long trade down here. If you're betting on this being some kind of high or low, then any trade in this area should have a target of around the previous highs. And I mean, potentially we go higher than that, but the ultimate target of this trade would be the high end of this range for sure and around the higher time frame market structure point. So we're close to the high, so I figured it's about time to start taking profits out of this trade. I started with a 50-cent risk. Now I got 275 locked in, another 175 on the table still. And truthfully, I am considering moving my invalidation for this trade up, maybe following 5-minute market structure, which, I'd say we kind of have a bit of 5-minute market structure here. It's actually not great because if we zoom in here, the high, which was this candle, was the same candle as the low. So the high and the low are the same candle, even though we had like a little range here, and most people probably would be looking at that as some kind of structure. It's hard to say it's 5-minute, even 3-minute structure, because the 3-minute, same deal. Actually, the high was put in slightly before this candle, so they're at least two candles. The high and the low are their separate candles on the 3-minute, but it's still not good structure. So I'm thinking about maybe just closing the position here if we lose this low with a close, and then if we flip market structure back to bullish at some point, then I can re-enter. But I'm going to look to try and capture as much profits from this trade as I can. So I think I'm going to go with the lower time frame market structure for my invalidation. But I don't think I'm going to put my stop loss here. I think I'm going to have an alert set here, and then if I see something that makes me want to close the trade, I'll take it. If we just kind of wick down here but don't get a lot of follow through, maybe we kind of start ranging, come back down to the low once more, and then come up to break market structure, well, then there was no real reason to exit here. I mean, this isn't really market structure, and I mean, if you get a bullish flip following a slight break of this low, then it was probably just a retracement before a higher time frame, higher low, like the 15-minute. So I'll be watching this carefully. So we have gotten to move down to that little area I was watching, that maybe market structure. If you don't want to call it market structure, you can at least call it an area of demand that we formed as we attempted to break structure here, which we eventually did. So we retested demand, at least retested the break of structure line, and what I'm kind of expecting now is some kind of a range. Usually after you get an aggressive move, you tend to form a range. From there, you either, see signs of a distribution, which maybe would be something like that, an SFP followed by a lower high, or maybe you see signs of an accumulation. So, from this range, maybe we can get a better idea of which way price is ultimately going to go. We could also find some trade setups from here. I'll be watching the high specifically for potential shorts. If we work our way up here with some low time frame market structure and see an SFP followed by a break of structure, that could be the first sign of a distribution. So that is one idea I'd be paying attention to. I don't know if I'm as interested in longs from the lows, especially since, right now in order to break market structure, we either have to get a move down to here and then come up past this high, or we have to kind of double break the low where we do something like this, get a little retracement, come back down. Hopefully we wick it both of the times and never actually get a close, and then, we'll have to come up and break market structure. And that would be the accumulation that I was talking about, Model 1, 1 tap, 2 tap, 3 tap. And I mean, potentially we see in Model 2 as well, where we come down for the SFP break structure and then get some kind of significant retrace, maybe with some structure that breaks. So, that's what I'd be looking for longs, but, I'm already in a long from much lower, so I'm not super psyched on the longs unless we see something pretty convincing. So that's where I think I'll leave this video. We've had some nice price action today. We potentially may see some more good price action, so if that happens, then I'll have some content for tomorrow's video, but I want to get this uploaded, so thank you all for watching. If you enjoyed, please consider leaving a like and subscribing. Really appreciate the support, and I will see you all in the next video.